Hi there, welcome to kneppyinvests. In this Appendix 4C quick take video, I'm going to look at a company called K2fly. K2 is a homage to the second largest mountain on the planet in terms of from sea level. And I think one of the reasons they did decide to name themselves K2fly was to climb K2 is a challenge. And what K2fly is trying to do is, or could be considered, a challenge as well. So what does K2fly do? They are a SaaS company. Were formed in about 2016, so have only been around for 5 years. But in that 5 years, they've done a very good job at growing their business and have a very impressive client list. I'll get into that in a second. So they build software that helps companies solve their ESG issues or functions. And particularly when I'm talking about companies here, we're talking mining companies. So their client list includes Rio Tinto, Vale, Glencore, Fortescue, and South32. For those who don't know what ESG is, I'm not sure if you've been, if you had your head in the sand or whatnot, but it just stands for environmental, social, and corporate governance. And those three factors measure the sustainability and societal impact of an investment in a company. It seems like a lot of investors now use those three factors as determining what companies to buy and what companies not. So you can see why mining companies might be interested in improving their environmental, social, and corporate governance stances. Before we get into the Appendix 4C for K2fly, just a few facts around this company. So look in some of their financials and whatnot. Ticker code K2F, which is a natural enough ticker code for a company called K2fly. Market cap 44 million, so not really on the high side for a SaaS company that does have $6.4 million of revenue in the last 12 months. And the other interesting and fascinating thing about K2fly is they are operational cash flow neutral. So only burn cash of $100,000 in the past 12 months. And they have been operational cash flow positive 2 of the last 4 months. And when you look at the price to sales ratio, only 7. And that's not even looking at the annual recurring revenue. And when you do actually calculate the price to sales ratio using annual recurring revenue, it's lower than that. So this company is, in my opinion, pretty good value for what they do and the potential of the company over the next, say, 5 to 10 years, particularly because they're focusing on ESG issues. And I think ESG is going to become an increasing factor behind what companies investors decide to invest in over the next few decades. So if you want to have a further look at K2F, they released their Appendix 4C on the 27th of April. First stop in our journey of K2fly's Appendix 4C is to have a look at the cash flows from operating activities. And the receipts from customers in the March quarter was $1.4 million. I was a touch disappointed by that, but also talk about why that may not be a disappointment when we look at the cash receipts history. So $1.4 million in receipts for K2fly in the March quarter. And because that has gone backwards, and they were operational cash flow positive 2 of the previous 3 quarters, and because that receipts has gone down a little bit, those costs haven't come down as much. So that does mean K2fly was operational cash flow negative for the quarter of $455,000. They did do a capital raising during the quarter that raised $7.5 million. So even though they finished a quarter with only $1.5 million, by the end of the current quarter, they should have in the $8 to $9 million range of cash on hand, but it might even be higher than that. And I'll talk about why it might be higher than that in the next slide when we look at their cash receipts history. So let's have a look at that right now. One thing I really like to do for every single company that releases an Appendix 4C and does have cash receipts, so I do this with companies that have 0 cash receipts, is I like to go through their receipts history from when they started reporting. So K2fly started in April 2017 with $160,000, and they've grown that from $160,000 to $1.4 million in the most recent quarter. So what I want to see when I look at their receipts history is an upwards trend. Doesn't have to be linear, doesn't have to be growing exponentially, although that is preferred. It just has to be going up. And we definitely see that with K2fly's history here. You could say maybe it is lumpy, but there is something that just stands out a little bit when I look at this, and that is there is always, or the last 3 years, there has been a peak in cash receipts in the final quarter of the financial year, and funnily enough, that is the quarter we're in right now. You can see that in 2018, 2019, and 2020, it was the July quarter that peaked, and then the next 3 quarters after that fell away. So because that is the next quarter, hopefully we're going to see cash receipts being greater than 2.2 million. And if they are greater than 2.2 million, there is a good chance they're going to be operational cash flow positive, because 2 of the last 3 quarters, they have done exactly that. Now, you might say, if they're heading towards a really good quarter for this current quarter, maybe the start of July, before they release their Appendix 4C in July, would be a good time to buy, just based off the receipts history. But that does not play out when you look at the chart. So let's have a look to see whether July is a good time to buy into K2fly through their history. This is the weekly chart for K2fly, going back to when they IPO'd in late 2016. Not the best looking chart that I've seen, but their trend is up, and you can put an upwards trend right there. That blue line, that sloping upwards, is the upwards trend. And right now the share price is double that trend line. So if I was keen to buy into this company, no rush. There is good value there when you compare the market cap to the growing revenue and the fact they are operational cash flow neutral. So the big question here I have is, because their June quarter historically is the best quarter, is just before when they release their financial results of that quarter, is that a good time to buy? So is July the 1st, or the first few weeks of July, the best time to buy into K2fly? So let's go back to 2018. Was July 1st, 2018 a good time to buy? Well, it was, because the share price actually did increase for about 2 or 3 months. In fact, the share price went from about 23 cents to a high of 35 cents. But right then, when they reached a high of 35 cents, we did see the share price pull back quite a bit during the later period of 2018. In fact, it went from 35 cents to a low of about 12, 13 cents in the start of 2019. So then what happened in July of 2019? Was that a good time to buy? Well, again, it was, because the share price increased from about 17 cents to a high of 28 cents at the start of 2020, just before the COVID-19 financial panic. And it did seem like there was a nice developing uptrend at that point in time. It was just the pandemic that put a stop to that uptrend. So was July 2020 a really good time to buy? It was a really good time. In fact, that would be considered a bit of an inflection point with this company, because it was operational cash flow positive quarter and the share price really took off. In fact, it went from 20 cents to a high of 40 cents in about 2 months. So you doubled your money, and the share price ever since then has been going sideways or tracking back a little bit. So there is potential that if you buy in just before the next quarter's results, we could see a bit of an uplift in the share price. It's only potential at this point, but it's just based off 3 samples over the past 3 years that the last quarter in the financial year tends to be the best quarter. It doesn't mean it's going to happen this year. This could be just a bit of a quirk in K2fly's results over the past 3 years, but there is potential there. When you look at the daily chart for K2fly, you can definitely see a bit of a run in the share price during July and August of 2020. The share price doubled during that 2-month period. So the question I had is, was the Appendix 4C that the company released in July, was that the catalyst behind the re-rating in the share price? In actual fact, the Appendix 4C was released about a third of the way through this bull run in the share price, so it was not really the catalyst. You could say maybe the market was anticipating a good quarter from K2fly, because it was an operational cash flow positive quarter. And that run in the share price continued into August and finished around the 1st of September. And the volume during that 2 months was also quite high. So the market was definitely interested in this company. And then from September 1st to current, the share price has gone sideways. We did see a bit of a run in the share price for a month from mid-January to mid-February. In fact, the share price rose about 50% in that time. But if you sort of take away that period, the share price has gone sideways or slightly down through that period. In fact, if you put a bit of a support line right on 30 cents, and we've hit 30 cents about 3 times ever since that run the share price in July and August last year, 30 cents could be a good position to buy. And I'm doing this video on the 13th of May. I had a look at K2fly's share price and it just hit 30 cents right now. So that could be a low risk buy if you are anticipating another bounce and potentially anticipating a run to share price before they release their Appendix 4C in July, hoping it's another really good financial report from the company. That is all I've got for this Appendix 4C quick take video on K2fly. Hope you've enjoyed it. If you have any questions or comments about this company or any other company on the ASX or on any international market, I'd love to hear it, and I'll answer anything you have to say in the next few days. So I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.